Greetings everybody, Makadi yenyu Salibona. Welcome to my video edition where I'll be discussing question number 1 to 10 for October-November session 2002. That is a Cambridge paper in our preparation for our October-November session, that is for Zimsec. So without wasting much time, let me look at the questions that are contained in the paper. Right, question number 1. A transport business owned by a sole proprietor purchased a motor vehicle. This is charged to the motor vehicle running cost account. What are the effects of this on the end of year balance sheet? Right, so we acquired a motor vehicle, but the motor vehicle ended up being entered as an expense. It would mean that the motor vehicle automatically is not reflected as an asset, so non-current assets will be understated. In the same token, non-current assets being understated, it would mean that the capital is understated. Remember, capital is calculated as assets minus liabilities. So using understated assets would also mean that we have understated capital, right? So we look at the correct alternative. A, they are saying fixed assets understated, then current assets understated. There is no relationship with current assets there. Then fixed assets overstated, current assets overstated. That is total madness. Fixed assets overstated, no. Capital account overstated. It can never be an answer. So the correct answer or the alternative that we are looking for is found at D there. Right. Then question number 2. A club's income and expenditure account for 2001 showed the insurance as 4,000. On 1 January, insurance owing was 800. On 31 December, insurance paid in advance was 600. What was the amount shown in the receipts and payments account for insurance for the year ended 31 December 2001? So I'll go the longer way but the sure way, right? I know most of the people would want to take shortcuts just because it's multiple choice, but that will cost you. So I think drawing an insurance account will enable us to come up with the correct answer, though it is quite long. So insurance account. Right, at the beginning of the year there was an accrual or an owing. An owing is known for having a credit balance. So I'll come and put my balance brought down. Right, let me check the amount. The amount is 800, so 800 there. Then I put the amount that was transferred to the income and expenditure. So income right, it is said to be 4,000. Then I look for year-end balances. We are told that at the end of the year we had an amount paid in advance for insurance. So a prepayment for insurance must have a debit balance, but its CD will be on the opposite side. So I'll come and say balance carried down. That amounts to 600. Then balance brought down 600. So the amount that was reflected in the recent payments will be our balancing figure there. Right, so punching my calculator, 800 plus 4,000 plus 600, that's 5,400. $5,400. So this is the answer that we're looking for. So we go back to our question and see where this is found, right? This is found at letter D. So that's the correct answer. Everything else doesn't make sense for us, right? A vehicle costs 30,000. The vehicle was later sold for 9,000 and the profit on disposal was 1,500. What was the accumulated depreciation? As well, I would draw a disposal account to determine the accumulated depreciation. So that is vehicle disposal account. Right. Remember, when we sell a non-current asset, for the cost we debit the disposal account and credit the asset account. So we come and debit our disposal and then we say vehicle. Right, it's said to be 30,000. Then the proceeds on disposal, we'll say bank or cash. Since it is not stated, I'll just put bank there. It's said to be 9,000. Then there is a profit on disposal. Remember, profit on disposal would be on the debit side of the disposal account. So say income statement or else profit and loss, which is 1,500. Then the balancing figure will be our accumulated depreciation. So accumulated depreciation, the total here 31,500. 31,500 minus 9,000, that amounts to 22,500. Then we go back to our question. We are looking for 22,500. There it is. Letter D. Right, next to that, a bookkeeper of a company has disappeared. There is no cash in the till and theft is suspected. The following information is known: cash at the beginning, right? Total sales during the year. In mind, total sales, and I believe they contain both credit and cash sales. Then we have a decrease in debtors during the period, then receipts from debtors paid into the bank, then expenses paid from cash, right? So we need to know the credit sales and take them away from 150,000. Once we take them away, we know the cash sales which were entered in the cash account. Then we will also reflect the expenses. Let us look at that, right? So first thing first, I'll put my cash account, right? There is a balance at the beginning, which is said to be 750. Then we'll put some cash sales there. Right. Then we have some expenses paid in cash. Right, the expenses paid in cash amounts to 5,000. Right, we're supposed to put some cash sales here. the figure that we are given is for total sales including credit sales, so we have to calculate our credit sales. Right, these credit sales, we are going to calculate them using, I think if we draw a control account, it will be better for us. Right, so that will be our sales ledger control account. Right, obviously one figure we know, credit sales is what we are looking for. Then we have some receipts from debtors. I think we are given that one. Alright, receipts from debtors paid into the bank, that's 96,000. Then I will look at the other figure then. Right, that's decrease in debtors. Right, so normally I'll show you how I do it. That is 5,500. Right, if I'm not so sure where should I put the decrease, I'll come and make an assumption of the opening balance here. So I'll put a hypothetical figure as a balance brought down, but obviously it must be greater than 5,500, so I'll put 10,000. But they're saying there has been a decrease in the debtors figure, so it means the closing balance was 5,500 less when compared to the opening balance. So balance carried down there, so I would take my hypothetical opening balance, which is 10,000, minus 5,500. Right, so I'll get something like 4,500. Right, that is if you don't know where to put the decrease. So 96,000 plus 4,500, that will give us 100,500, 100,500, then minus 10,000, that gives me 90,500. So cash sales will be equal to total sales minus credit sales. Right, total sales, they are 120,000 minus credit sales of 90,500. Right, that amounts to 29,500. Right, and we will go and insert it in our cash account, which is 29,500. We sum it up. $30,000 So the amount that disappeared with the cashier there supposed to be 25,250. So we look at our question. Right, so it seems as if there is a mishap. There is a figure that we didn't calculate so well. Let me just go and check. Yeah, I've seen it. I think where I've put 120 here, it's supposed to be 150,000 instead of 120. Sorry for that. Right, so this is supposed to be 59,500. Let me erase that one. Right, so that's 60. Minus 5,000, we get 55,250. Right, so come and look at our answers. 55,250, the correct answer is found at C there. Right, so that's how we go about it. So let me just explain something. Right, so remember, this is a hypothetical figure. You just have to think of this figure. That is, if you don't know, if there is a decrease in trade receivables, it would mean that the amount that was on the debit side is greater. So you would put 5,500 on the debit. It will come out smart, right? Or else, if there is an increase in trade receivables, you would come and put it on the credit. But if you are not comfortable with just throwing it on the debit or credit, I have shown you come up with a hypothetical opening balance. You increase it or decrease it accordingly, and the question will just come out nicely, right? So let's go ahead. Right, we look at question number 5. Which of the following is a tangible fixed asset? Remember, tangible fixed asset are those with physical substance. We can touch them. Patents, we cannot touch them. Purchased goodwill, it's an intangible. Short-term leasehold assets, right? So this becomes the answer because this is an asset with a physical substance we can touch and see. Trademarks also, they are intangible assets, right? Then question number 6. A company's accounts show the gross profit for the year of 32,500. After the accounts were prepared, it was found that opening stock had been overstated by 2,400 and closing stock had been understated by 3,400. What is the corrected gross profit? Right. I normally tell people, for simplicity purposes, opening stock should be treated as an expense. Right? The reason why we say it should be treated as an expense, the journal for opening stock, you'll be debiting your cost of sales and crediting your stock. So in the fact that you are debiting cost of sales, which is eventually deducted from the revenue, mean that it is just as good as an expense. Then closing stock should be treated as an income. Because of the journal that we pass to record closing inventory, we have to debit our inventory and credit our cost of sales. So this one is a credit if you want, and this one is a debit. Remember, all debits reduce profits, all credits increase profits. Right, so what are they saying? We have overstated a debit, meaning to say our profit is understated by 2,400 because of this error. and we have understated a credit, it also means that our profit is understated by the same amount. So we are supposed to add the overstatement of opening stock and the understatement of closing inventory, right? So punching our calculator, 32,500 plus 2,400 plus 3,400, we get the corrected gross profit, which is 38,300, and this is the alternative that we are looking for. So the correct answer there is D, right? Then we go ahead. The treasurer of a club has decided not to include subscriptions owing by members in the balance sheet at the year end. Which accounting concept is being applied? Obviously, he is not applying the accruals concept, because if he had applied the accruals concept, he would have included that amount. Remember, the accruals concept says that we would include amounts or transactions and events to the period to which they relate despite the actual movement of cash, but that wasn't done. So it means they are following the prudence concept, which would say assets should not be overstated. So we are not going to recognize amounts that are not yet received, right? We are being prudent, right? There's nothing to do with going concern there. I remember in the last paper I have explained on going concern. Then money measurement, it's an accounting concept which says that we can only include items in the financial statements that can be expressed in monetary terms. So the correct answer is that we are doing this in line with the prudence concept. I have seen another question which said the inclusion of subscriptions in arrears in the statement of financial position contravenes which concept? It will be contravening the prudence concept, because prudence concept will not allow the inclusion of subscriptions in arrears. Then we have to go ahead. Then stock which cost 1,200 has been damaged. Fair and fine. It would have sold for 1,800 when perfect, right? So this is the cost, right? And this is the normal selling price, which we call the realizable value. But remember, it's damaged. It means we can no longer sell it at 1,800. So it can be sold for 1,700. So this is now the new realizable value. If repairs are undertaken, right, so we would have to repair it. This is what it's a repair cost, right? Then to replace the stock would cost 1,000, right? This is the replacement cost, but for the purposes of inventory valuation, this figure is not supposed to be incorporated. So at what value should the damaged stock be shown in the final accounts? Remember, the International Accounting Standards number 2 inventory valuation rule states that inventory is valued at the lower of cost and net realizable value. So I'll put the cost there. The cost of my inventory is 1,200. Then my net realizable value, I'll take the new realizable value, because the inventory has been damaged. It would be sold for 1,700, but for that to happen, we would have to incur 600 in repairs. So the net realizable value will be 1,100, and we take the lower of the two, which is 1,100. So inventory will be valued in the accounts at 1,100, right? Then we go ahead. Accountants prefer the commercial reality of a transaction to strict legal approach. This is an example of substance over form. I remember in the last video, I made the statement emphatically. I said that we take the commercial reality of a transaction, not its strict legal form. That is the application of substance over form. Remember, we said the inclusion of assets acquired on hire purchase and those acquired on lease basis is the application of substance over form, right? So we look at the last question, which is on errors in suspense accounts. A trial balance does not balance and a suspense account is opened. Subsequently, the following errors are found and a suspense account is cleared, right? So what I would simply do is to pass the journals to correct these errors and draw our suspense account to calculate the original balance required by the question, right? So some journals here. Right, so let me go to a fresh page. Debit, then credit. Right, we look at the first error. A sales invoice for 1,240 had been omitted from the books. Right, that's error of omission. No suspense involved there. We simply have to record that. So you debit your trade receivables, $1,240. Then we credit our sales with the same amount, 1,240. Right, then next to that, rent paid 2,600 was entered correctly in the cash book, but incorrectly as 6,200 in the rent account. Right, it was entered in rent account on the debit side as 6,200, meaning to say we have put an amount which is greater on the debit side, so we would have to reduce that amount. It's overstated by 3,600, so we need to reduce the amount debited to rent, so it means we have to credit our rent, and therefore we debit our suspense. So debit suspense, credit rent 3,600. Right, finally, the purchases journal was under cast by 1,980. So the purchases are understated. We would have to increase the purchases. So debit purchases, credit suspense 1,980, 1,980. So posting these transactions to a suspense account. Right, I will debit my suspense account. Error number 2 there, 3,600. Then the last error there, 1,908. So the original balance in the suspense account will be the balancing figure, balance BD. So 3,600, 3,600 minus 1,980, we get 1,620 on the credit. So we look at our answers. 1,620 on the credit. There is the answer on A. Right, thank you. Let's meet again in another video edition.